Hi, I am Aifairuddina binti Zulafandi. My metric number is 02D8021F1054.
Assalamualaikum and hi, my name is Noaina Shazana Betusin. My number metric is 02D821F1058.
Hai, Assalamualaikum. My name is Syamina Akila binti Muhammad Rasipan, Raya Sumat Harun, and my number metric is 02D821F1072.
Definition: demand of money. The demand of money is the desired holding of financial asset in the form of money, that is, cash or bank deposits, rather than investment. According to Keynes, people will still prefer to hold their asset in the form of cash, even though money deposited in the bank will make them earn interest. Keynes was the opinion that the demand for cash in an economy is influenced by three main motives, which is 1. Transaction motive, 2. Precautionary motive, and the last one, speculative motive. The first purpose of money is transaction motive. The amount of cash needed for transaction purpose influenced by the level of income. When the income increases, the ability of household and firm to engage in the transaction will increase. The demand for money for transaction purpose will increase and vice versa. The second purpose of money is precautionary motive. Cash for unexpected expenses such as hospital bills or car repair bills. Firms need cash to pay for unexpected expenses such as bills for the repair of factories damaged in disaster or as payment for raw materials that suddenly increase in price. Last one, speculation motive. People need cash for speculative activities referred to future prediction or bonds and stock, and thus engage in bond and stock transaction for the purpose of generating profit. People also need cash to buy bonds when they expect interest rates to rise in the bond market. The demand for money curve. The demand curve for money shows the quantity of money demanded at each interest rate, all other things unchanged. An increase in money demand. An increase in real GDP, the price level or transfer cost, for example, will increase the quantity of money demanded for any interest rate R, increasing the demand for money from D1 to D2. The quantity of money demanded at interest rate R rise from M to M1. The reverse of any such event would reduce the quantity of money demanded at every interest rate, shifting the demand curve to the left.
Next, I will talk about definition of money supply. What is the money supply? In economics, the money supply or money stock is the total amount of monetary asset available in an economy at a specific time. According to Sarimah 2008, supply of money is total of all types of money in an economy. For example, cash, coins, and balance in bank accounts. Money supply have three types. The first is M1, second is M2, and third is M3. What is M1? M1 ialah bekalan wang sempit, known as narrow money, which is made up of money in circulation and checkable deposit. Then, money in circulation consists of paper currency and coins. Checkable deposit made by private individuals and the public sector into commercial banks, which can be withdrawn by using checks. The second is M2. Apa itu M2? M2 ialah bekalan wang luas. The supply of money on current terms, M2, consists of M1 and quasi-money. Quasi-money can fulfill part of the function of money, for example, as a store of value. Then, quasi-money consists of saving deposits and fixed deposits, tradable deposits, certificates, and Bank Negara Malaysia certificates. The last is M3. M3 ialah bekalan wang yang sangat luas, known as broad money. The supply of money in M3 consists of M2, saving, and a fixed deposit in other financial institutions. For example, in Malaysia, other financial or banking institutions include merchant banks, Bank Islam Malaysia Berhad, and finance company and discount houses. Quantity theory of money by Irving Fisher. The theory that money supply has a direct relationship with the price level. Penawaran wang mempunyai hubungan langsung dengan tingkat harga between the supply of money and the price of goods in the economy. Okay, back to me again. The equation for the quantity theory of money can be described by MV equal PT, where M is total amount of money in the economy, V is velocity of money circulation. For example, how many times money gets exchanged for goods or services. P is general price level in the economy. T is total index of physical volume of transaction. PT can be defined as total expenditure in a given time. Okay, the last is assumption of the theory of money. The first is velocity of circulation. V is constants. Velocity of circulation is the average number of times that the average ringgit is spent of final goods and services in a year. Second is total transaction is constants. The third is there is full employment in the nation. And the last one is increase in money supply will increase the general price level. Okay, that's all from me. I will pass this to Aina.
Now, I want to share the supply of money curve. Money supply curve show the relationship between rates and the quantity of money supply in a country. Depicts a money supply curve as because the supply of money in the economy is controlled by central bank. Curve as is curve perfectly inelastic. Therefore, even though interest rate increase from 0R2 to 0R1 or decrease 0R1 to 0R2, the money quantity supply remains at 0M0. Next is financial market equilibrium. Financial market equilibrium is achieved when the money supply curve intersect with the money demand curve at the certain interest rate. Financial market equilibrium is achieved at point E when curve S intersect with curve D. At point E, the equilibrium interest rate is 0R0, while the equilibrium money quantity is 0M0. The financial market will not achieve equilibrium if the interest rate increase higher than 0R0, for example to 0R1, or decrease lower than 0R0, for example to 0R2. Any change in the supply of money or demand for money or both will influence the interest rate and equilibrium money quantity. Next is example. Paper money 5,500, negotiable certificate 3,600, saving and fixed deposit in other financial institution 7,900, saving and fixed deposit in commercial bank 15,000, current deposit in commercial bank 9,000, and Bank Negara Malaysia certificate 12. Example question. Dia bagi fiat money 8,000, so dia suruh kita cari coin. The formula is fiat money equal coins minus paper money. So, kita nak kira coin, so kita kena ambil fiat money 8,000, kena tolak dengan 5,500, akan dapat 25,000. Next, kita nak kira M1. Formula untuk M1 ialah fiat money plus current deposit. So, fiat money 8,000, kita kena tambah dengan current deposit 9,000, so kita akan dapat 17,000. Next, untuk kita kira M2. Formula untuk M2 ialah M1 plus negotiable certificate tambah saving and fixed deposit in commercial bank and plus Bank Negara Malaysia certificate. So, 17,000 tambah 3,600 tambah 15,000 dan tambah 12,000. So, kita akan dapat 47,600. Kita nak kira M3. Formula untuk M3 ialah M2 plus saving and deposit in other financial institution. So, 47,600 tambah dengan 7,900. So, kita akan dapat 55,500 untuk M3. Next, kita nak cari kuasi money. So, formula untuk kuasi money M2 minus M1. So, 47,600 kita tolak dengan 17,000, so kita akan dapat 30,600. Last, kita nak cari brought new money. So, formula untuk brought new money M3 minus M1. So, 55,500 tolak dengan 17,000, so kita akan dapat 38,500.